welcome to the Property Wealth Podcast. We're so glad you're joining us today.
Absolutely. It's great to have you here.
So if you've ever thought about diving into duplex or triplex investing, you're in the right place.
Yeah, these types of properties can be a game changer for building wealth over time.
Exactly. We're going to break down some practical tips and insights. So whether you're just starting out or looking to expand your portfolio, there's something here for you.
We'll talk about the benefits of multifamily properties, how to find the right ones, and some common pitfalls to avoid.
And, of course, we'll share some real-life examples to make it all relatable and actionable.
Right. It's all about making informed decisions and feeling confident in your investment journey.
So let's jump right into it. First up, let's talk about why duplexes and triplexes can be such a smart investment choice.
So when we think about duplex and triplex investing, it's really crucial for folks over 40 right now, especially considering retirement timelines. A lot of people in that age group are starting to really think about what their retirement looks like, right?
Absolutely, Mike. It's like this ticking clock, isn't it? I mean, you start realizing that you might have just a couple of decades to really build that nest egg.
Exactly. And with the current economic climate, inflation is a big worry. The cost of living is rising, and traditional retirement savings like 401ks or pensions just aren't cutting it anymore. Real estate can be a hedge against that inflation.
Right, because when rents go up, so do the income streams from those properties, yeah? It's like your investment grows with the market, which feels a lot more secure.
Definitely. I've seen investors who bought duplexes 10 or 15 years ago, and now they're sitting on properties that have doubled in value. Take, for instance, a couple I worked with. Let's call them Tom and Lisa. They bought a triplex in their early 50s, thinking it would just be a side investment. Fast forward to now, they're seeing significant rental income that not only covers their mortgage, but also contributes to their retirement savings.
That's such a great example. And it's relatable too, because many people are in that position wanting to make their money work for them instead of just sitting in the bank.
Exactly. And the wealth transfer aspect is huge. Many of us are starting to think about leaving something behind for our kids or grandkids. When you invest in real estate, you're not just building your own wealth, but potentially setting up a legacy for your family.
Yeah, that's a powerful motivator. I mean, imagine being able to pass down a property that not only holds value, but can also generate income for them. It's like giving them a financial head start in life.
Right. And with the market shifts we're seeing, especially post-pandemic, there's a growing interest in multifamily homes. People are looking for affordable housing options, and that's where duplexes and triplexes come in. It's a win-win, really.
Absolutely. I've noticed that too. More people are open to renting in multifamily units, especially younger folks who are just starting out. It's like a perfect storm for investors looking to get into that space.
And think about the emotional side of financial security. I mean, it's not just about dollars and cents. It's about peace of mind, knowing that you have something tangible, something that can provide for you in retirement.
Yes! I think that's often overlooked. The stress of financial uncertainty can really weigh on you, especially as you get closer to retirement age. Real estate can provide that cushion, you know?
Exactly. One of my clients, let's call her Nancy, was so worried about her retirement funds dwindling. She decided to invest in a duplex, and now she not only has a steady rental income, but also feels empowered. She told me the other day that she sleeps much better at night, knowing she has that additional income stream.
That's such a relatable story. It's amazing how much of an impact financial security can have on your overall well-being.
Right? And as we're seeing shifts in the market, it's important to adapt. Many people over 40 might feel like they've missed the boat on real estate investing, but that's simply not the case. There are still opportunities out there, especially in the multifamily sector.
Exactly, Mike. And it's not just about jumping in blindly either. It's about being strategic. Like you mentioned earlier, it's essential to think long-term.
Definitely. And that's where understanding local markets and trends is key. For instance, areas that are seeing growth due to new businesses or infrastructure projects can be gold mines for duplex and triplex investments.
Yeah, and it's all about doing your homework. I've seen investors who really dive deep into the neighborhoods they're interested in, looking at factors like school ratings, proximity to public transport, or even future development plans. Those things can really impact property values.
Exactly. And investing in multifamily properties also allows you to spread your risk. If one tenant moves out, you're not losing all your income. You still have other units generating revenue. That diversification is really important, especially in uncertain times.
That's such a smart way to think about it. It's all about building resilience in your investment strategy.
Absolutely. And for those over 40, it's about leveraging what you already have, like equity in your current home, to finance those investments. Many don't realize they can use that to help them step into the world of real estate investing.
Right, and that's a great point, Mike. It's about finding ways to make your existing assets work for you.
Exactly, and I think as we transition into the core strategies, it's crucial to keep these emotional and practical aspects in mind. Real estate isn't just a financial decision, it's a life decision that can shape your future.
Yes, it's about building a life that feels secure, allowing you to enjoy that time with family, travel, or pursue passions.
And with the right strategies in place, it's definitely achievable. So let's dive into some of those core strategies for investing in duplexes and triplexes. So let's dive into some core strategies, shall we?
Absolutely. I think a great place to start is with the 1% rule. It's such a simple concept, but it can really guide your investment decisions.
Right? The 1% rule suggests that you should aim to buy a property that rents for at least 1% of the purchase price each month. So if you're looking at a property listed for $200,000, you want to see if you can rent it for at least $2,000 a month.
That makes sense. It's a quick way to gauge if a property is worth pursuing. But what if the rent is below that 1% mark?
Good question. If it's below, you'll want to really look at the numbers closely. You might consider whether there's room to increase the rent after making some improvements, or if the property is in a high-demand area where rents are likely to rise.
Right, and that leads us into the 50% rule, which can be super helpful for estimating your expenses.
Exactly. The 50% rule states that you should expect to spend about 50% of your rental income on operating expenses, like maintenance, property management, taxes, and insurance. So if you're bringing in $2,000 a month in rent, you should budget around $1,000 for those expenses.
And that's a really good way to avoid surprises, right?
For sure. It gives you a clearer picture of your cash flow. You want to ensure that your operating income covers your mortgage and expenses comfortably.
And speaking of mortgages, let's touch on financing options. Many folks just starting out might not know where to begin with that.
Yeah, financing can be a bit daunting. A common route for first-time investors is to look into conventional loans. These typically require a down payment of 20%. But if you're living in one of the units of a duplex or triplex, you might qualify for an FHA loan, which can allow you to put down as little as 3.5%.
Oh, that's a game changer. So living in one unit can really open up financing options.
Exactly. And it's not just about saving on the down payment. You'll also be building equity in the property while having your tenants help cover the mortgage.
So if someone buys a duplex for $300,000, they could live in one side and rent out the other for, say, $1,500 a month.
Right. And if they put down 3.5%, that's around $10, $500. If the rental income covers most of their mortgage, they're essentially living for a lot less than they would in a single-family home.
That's a smart strategy. But what about evaluating the deals themselves?
Great point. It's crucial to have a checklist. First, you want to look at the location. Is it in a growing area? What are the schools like? Proximity to amenities,
And then there's the condition of the property.
Yes, you should factor in any necessary repairs or renovations. A property that looks good on the surface might have hidden issues, like plumbing or electrical problems.
So getting a good home inspection is essential.
Definitely. And beyond the physical condition, you should also consider the rental market. What are comparable properties renting for? This can help you determine if the asking price and potential rent align.
Right, and don't forget about the cap rate.
True. The cap rate, or capitalization rate, is calculated by taking the net operating income and dividing it by the property's purchase price. It gives you an indication of the potential return on investment.
So if a property generates $24,000 a year in net income and costs $300,000, the cap rate would be 8%.
Yes, that's right. An 8% cap rate is generally considered good. The higher the cap rate, the better the potential return, though it often comes with higher risk.
That's a good balance to keep in mind. And it's important to remember that cap rates can vary by market, right?
Exactly. What's considered a decent cap rate in one area might be low in another. So always do your local research.
And let's not forget about property types. Are there specific types of duplexes or triplexes that are better for investment?
Typically, properties in urban areas tend to attract more tenants, but they also come with a higher price tag. Suburban duplexes and triplexes can provide good cash flow and often come at a lower purchase price.
So it's about balancing your budget with your investment goals.
Right. And when you're evaluating properties, consider the surrounding community. Are there job opportunities, good schools, and public transport? Those factors can really influence your rental demand.
And talking about demand, how do you ensure that your property stays occupied?
Well, it starts with good tenant screening. You want to check rental history, credit scores, and employment status. A good tenant can make a world of difference in your investment.
So it's not just about finding someone to fill the space, but finding the right person.
Exactly. And don't forget about maintaining good relationships with your tenants. Happy tenants are more likely to renew their leases, which means less turnover and fewer costs in the long run.
That's such a good point. And I think we should also touch on some common pitfalls that new investors might encounter.
Yes, let's do that. One big mistake is underestimating expenses. Many first-time investors think they can just look at the mortgage payment and rental income without considering maintenance, vacancy rates, and property management fees.
And that can really bite you in the long run, can't it?
Absolutely. It's important to budget for those expenses and have a financial cushion for unexpected repairs or vacancies.
And what about the temptation to skip the inspections to save money?
That's a risky move. Skipping inspections can lead to costly surprises down the line. Always get a thorough inspection before purchasing.
Those are such valuable insights, Mike. I feel like we've covered a lot of ground on duplex and triplex investing.
Yeah, I think so too. There's so much potential for building wealth in real estate if you approach it thoughtfully.
Definitely. Let's wrap this up by reminding our listeners to keep these strategies in mind as they start their investment journeys.
So let's dive into some of those common pitfalls, yeah? I mean, one of the big ones I see is over-leveraging.
Oh, absolutely. It's like, people get excited and think they can take on more debt than they really should. It can feel tempting, right?
Exactly. I had a client once, let's call him Tom. He bought a duplex, thinking he could quickly renovate and flip it for profit. But he took on way too much debt. When the market shifted, he found himself in a tight spot.
That sounds tough. So what happened next?
Well, he couldn't keep up with the mortgage payments, and he ended up having to sell at a loss. It was a hard lesson. The key takeaway here is to really assess your financial situation before jumping in.
Yeah, it's all about knowing your limits. And then there are the bad tenants.
Oh, that's a classic pitfall as well. You can have your property looking great, but if you get the wrong tenants, it can turn into a nightmare.
Right. I remember a story from a friend who managed a triplex. One tenant was always late on rent, and then they started damaging the property.
That's the thing. It's not just about the rent. You have to factor in the costs of repairs and, potential legal fees if you have to evict someone. It's a domino effect.
Exactly. And it can eat away at your cash flow. Speaking of cash flow, ignoring it is another big mistake.
Yes. It's crucial to keep an eye on that. I once spoke with a woman, let's call her Lisa. She bought a duplex, but she didn't run the numbers properly. She thought she'd make a profit, but after expenses, she was barely breaking even.
That's gotta be disheartening. What did she miss?
Well, she overlooked things like property management fees, maintenance costs, and even utilities that she was covering. It's easy to get caught up in the excitement and forget those details.
And they can really add up. It's like budgeting 101, right?
Exactly. And then there's the temptation to time the market. People often think they can predict the highs and the lows.
Oh man, that's a slippery slope.
Right? I had a client, let's call him Dave. He waited for what he thought was the perfect moment to buy. But you know how it goes. The market kept climbing, and he missed out on some great opportunities.
So he just kept waiting for the next dip, but it never came?
Pretty much. By the time he finally decided to jump in, prices had skyrocketed. It's a reminder that timing the market can be more risky than just getting in and holding long term.
Absolutely. And then we can't forget about hidden costs.
Yes, that's a big one. I once heard of an investor who bought a triplex without inspecting the roof. Turns out it needed a complete overhaul.
Ouch! That's a massive expense.
Right? And he didn't factor that into his budget. It can really derail your plans if you're not thorough up front.
So what are some red flags investors should look out for?
Well, for starters, always do a thorough inspection. Look for signs of wear and tear, like water stains or cracks in the walls. They can be indicators of bigger issues.
Yeah, and checking out the neighborhood is key too, right?
Exactly. Make sure to research the local rental market. See what similar properties are renting for. If the numbers look off, that's a red flag.
Also, what about the tenant screening process?
Absolutely. Do thorough background checks. Call previous landlords. If a tenant seems evasive or their rental history is spotty, that's a sign to be cautious.
So it's all about being proactive, right?
Yes, it's about doing your homework. And if you feel overwhelmed, don't hesitate to consult with professionals like real estate agents or property managers. They can help you navigate those tricky waters.
Great advice, Mike. So if someone finds themselves in a situation where they've made one of these mistakes, what can they do?
Well, first, don't panic. It's important to analyze the situation calmly. If it's over-leveraging, maybe refinancing could help.
And if they've got bad tenants?
Start with open communication. Sometimes, just having a conversation can resolve issues, but if it's a serious problem, you might need to consider eviction or find a property manager who can help handle it.
That's a good point. And for hidden costs, definitely get a detailed inspection next time.
Exactly. And remember, cash flow is king. Keep track of all expenses and make sure you're not just focusing on the potential rent.
It all comes down to smart strategies, right?
Absolutely. Real estate investing is a long game. It's about making informed decisions and being aware of the risks.
So if someone is just starting out, what would you tell them to keep in mind?
Start small, educate yourself, and always have a buffer for unexpected expenses. It's better to be safe than sorry, and patience pays off in the long run.
Wise words, Mike. I think that's a perfect note to end on as we transition to our next steps.
For sure. Let's explore how to build that solid foundation moving forward. So, we've talked a lot about duplex and triplex investing, right? Now, let's get into some practical steps, things listeners can start doing right away.
Absolutely. It's all about taking action. What's the first step you'd suggest?
Well, one of the best ways to kick things off is to start analyzing some deals. You don't have to dive in head first. Maybe pick one property a week to evaluate. Just get into the habit of looking at listings and running the numbers.
That sounds manageable for sure. Are there specific tools or apps you recommend for this?
Definitely. A popular one is Zillow for browsing listings and getting a feel for market prices. Then there's the Bigger Pockets calculator, which is super handy for crunching the numbers on potential investments.
Oh, I love that one. It really breaks down cash flow, ROI, and all those critical metrics.
Exactly. And if you're looking at rental properties, Rent-A-Meter can help you gauge rental prices in the area. You want to make sure you're not overestimating your potential income, right?
Right, and local MLS access can be a goldmine too. It gives you insights into active listings, sold properties, and market trends.
For sure. And don't forget about Deal Check. It's a great tool for analyzing properties as well. Really user-friendly too.
Those sound like excellent resources. Now let's talk about education. Any books or podcasts you'd recommend for those just starting out?
Absolutely. I always recommend the book on rental property investing by Brandon Turner. It covers so much ground and is super approachable.
Oh, I've heard good things about that one. What about podcasts?
Well, besides our own, of course, Laughs Bigger Pockets podcast is fantastic for real-life stories and tips. It's like having a conversation with successful investors.
That's a great way to stay motivated and learn from others' experiences.
Right? And I'd say, once you feel comfortable, look into joining local meetups. It's a great way to network and learn from others in your area.
Networking can be so valuable. You never know what opportunities might come from just meeting people.
Exactly. And remember, you don't have to be an expert right away. Starting small is key.
Speaking of starting small, what are some daily habits folks can adopt?
Well, you could set aside just 20 to 30 minutes a day to read articles or watch videos about real estate investing. Just little bits of learning can add up over time.
That's such a good idea. And even keeping a journal of your thoughts or questions about investing could be useful.
Totally, and if you're analyzing deals, keep a spreadsheet to track your findings. It'll help you see patterns and make better decisions down the line.
Love that. It's like building your own little database of knowledge.
Exactly. And don't hesitate to ask questions in online forums or social media groups. The real estate community can be really supportive.
That's so true. Engaging with a community can really spark new ideas and insights.
Right? And, if you're feeling ambitious, consider setting a goal, like attending one property showing a month. Just get into the habit of being active in the market.
That's such a practical way to ease into it.
And remember, it's all about progress, not perfection. Start where you are and build from there.
With these tools in your pocket, you're ready to move forward. Let's recap what we've covered today.
Well, Sarah, I think we covered a lot of ground today.
Absolutely, Mike. We unpacked some really valuable insights from the Duplex and Triplex investing guide.
Right? So let's highlight a few key takeaways. For starters, understanding the cash flow potential is crucial.
Yeah, and that ability to generate income from multiple units can really set you up for long-term success.
And then there's the importance of location. It can make or break your investment.
Exactly. A good location not only attracts tenants, but also helps in appreciating property value over time.
Also, we touched on the financing options available. It's not just about the initial investment, but also how to leverage different financing strategies to maximize your returns.
Right. And remember, building relationships with local professionals can provide you with insights and opportunities that you might not find on your own.
Definitely. Networking is key in this business.
It really is. So, if you take these lessons to heart, it can truly help you build wealth through real estate.
You've got to stay patient and persistent, but the rewards can be significant.
Oh, for sure. And if you found today's episode helpful, we'd love for you to like and subscribe.
Yeah, and don't forget to comment below with your biggest takeaway or any questions you might have.
And if you know someone over 40 who's looking to invest in property, share this episode with them.
That's a great idea.
Next time, we'll dive into the small multifamily, 2 to 4 units sweet spot.
That's going to be exciting.
Yeah, looking forward to it.
Thanks for joining us today.
Take care, everyone.
See you next time.